Invented by Wells Wilder Jr. to trade commodities, average true range is designed to measure periodic volatility. It accomplishes this goal by assigning a true range value to designated periods. Then, it takes an average of these true ranges. The result is the ATR. To ensure the indicator is current, the ATR value is then updated to account for evolving market conditions. Upon doing so, traders are able to project forthcoming pricing volatility on an ongoing basis. Intimidated? Don't be. In this video, we will break down the ATR, and more importantly, we will show you how to integrate it into your trading. By the end credits, you may find the average true range to be an invaluable addition to your trading plan, or you may find it to be more trouble than it's worth. As always, the choice is yours. If the name Wells Wilder Jr. sounds familiar, that's because it is. Wilder developed a number of technical indicators, the most famous of which is the Relative Strength Index. Now, before we move on to the intricacies of the average true range, there are a few things we first need to know. The ATR is intended to solve the problem of measuring current volatility. It does not suggest or predict the direction of price. In this way, it is classified as an oscillator. An oscillator is a technical analysis tool that contextualizes price action between an upper and a lower extreme. These indicators are commonly used to execute reversal, breakout, and range trading strategies. While some trend traders may use oscillators to buy or sell pullbacks in the prevailing trends, trend applications are more exotic. Okay, let's move on to the derivation of the ATR. The name average true range suggests a lot about the indicator. It is an average of true ranges. So what is a true range? A true range is the base value that represents the distance between a period's extremes. It is the greater of these three calculations. Number 1, the current period's high minus the previous period's close. Number 2, the current period's low minus the previous period's close. And number 3, the current period's high minus the current period's low. Think of true range as being a baseline value. While it may exclude some extraordinary highs and lows, it's a number that we can work with in our ATR calculations. A quick example illustrates this point succinctly. Let's assume that we are looking at a daily chart for Tesla stock. Yesterday, Tesla shares closed at $175. Today's high for Tesla is $180, and the low is $170. Can you find Tesla's true range? The answer is 10, the distance between the current period's high and low. Why? Because it is a greater value than the distance from either the current upper and lower extreme to the previous day's close. We need to understand a few things before we dive into the ATR calculation. First, we only work with absolute values. There are no negative numbers in true range figures. Second, Wilder developed the ATR framework before intraday data became widely available. It is built with daily true ranges in mind. This was done to account for common gaps in pricing from the previous day's close to the next day's open. However, this is of little consequence to us. We can apply the ATR to any asset on any time frame. One of the best things about the ATR is that it gives us an idea of current volatility. However, before we can calculate our current ATR, we need to calculate our previous ATR. This figure is the average true range for the preceding period and will be the basis for our current ATR figure. In our example, we will reference the ATR default setting of 14 periods. This table shows us a breakdown of the previous ATR calculation for Tesla stock over the past 14 periods. As you can see, it is an average true range values. To calculate, simply add the true ranges and divide by the period 14. This gives us your previous ATR. All right, now it's time to figure out our current average true range. This is the ATR value that we can apply to the upcoming period. It is the present ATR value and is viewed as having a greater predictive value. To build the current ATR, we adjust our previous ATR to reflect the present true value. Wilder does this by multiplying the previous ATR by the number of periods minus 1. Then, the current true range is added in before dividing by the number of periods. Let's walk through this adjustment for Tesla stock with our current true range of 10. We take our previous ATR of 13 and multiply by our period of 14 minus 1. Then we add the current true range of 10. Finally, we divide by our period 14. Voila, our current ATR is 12.7. All right, it's time to observe the average true range in action. Let's head back over to the chart lab and add the indicator to our MetaTrader 4 and TradingView charts. Okay, this is a look at the MetaTrader 4 MT4 platform. If you've traded Forex CFDs or in an OTC capacity over the past decade or so, then you're more than likely familiar with MT4. Today we're going to put that ATR indicator right on the chart. So it's a fairly straightforward process, and let's get to it. You'll notice we have a few windows here on our left-hand column, Market Watch up top with all of our Forex pairs, and then beneath that's the Navigator. The Navigator is where we find the functionality, the different tools, and the different ways to really customize this platform and make it our own. And you'll notice right here, the second prompt is your indicators, and you're going to expand that indicators list, and you can see all the different choices you have. You simply go down the list, you find ATR, you double click on ATR, and that brings up our action balloon. Now our action balloon is going to let us do pretty much whatever we want with the indicator, and right here under inputs, you'll notice that our value is 14. So remember that ATR period, 14 is the default setting. So what we're going to do here is essentially leave it the same, but remember, you can manipulate this. If you wanted to change the value, you can make it anything you want. Let's say we wanted to go with a 15 instead of a 14. We just simply hit OK. And then you go right here, boom, and it pops up as a separate window beneath price action. It's actually pretty handy. You'll notice that these volatility, as that ATR gets larger, your volatility increases as well. And we're basically looking at what price action is doing at all times with regards to that ATR reading. So that's essentially how you apply that. This is just a basic Euro USD daily chart. You'll see how that ATR just ebbs and flows as market conditions change. And one of the great things about this indicator is it's relatively simple to apply. Interpreting it's a bit more complex. We're going to talk about that in the strategies section, but at least getting it up and running on MT4 is fairly simple. Taking it off is just as simple. You just right click on your chart, go to indicator list, you're going to go to ATR, click on ATR and push delete, and there you go. You're back to a nice clean pricing chart. So that's a look at how to apply the ATR to a pricing chart in MetaTrader 4. This is a look at the TradingView platform. Now, over the past 5 years or so, TradingView has become immensely popular, and it's definitely one of the industry standards. So odds are if you're a modern trader, a contemporary trader, then you've seen TradingView at least once or twice. Well, adding the ATR, the average true range indicator, to the TradingView platform is relatively straightforward. It comes up as a separate window as it did in MT4. Now we just go up to the top, our toolbar up here. We click on that indicators prompt, and we cursor right down to that average true range. Right there it is. Once again, it begins with A, so it's going to be right near the top of your list. So we've just clicked on that and applied it to the chart. You'll notice it's popped up as its own separate window there. What we can do though is we can go to work on this and actually tailor it and make it something that we want to look for. We can customize the indicator in any way we see fit. So the first thing I would do probably is change the color. That's how you do it. It's right there. Click here. Also, that line width, I'm not blown away by that. Let's make it a little easier to see, and then there you'll have it. So visually, we've just improved it. Now, as far as your inputs go, you're going to look at your time frame, which is our chart duration. This is a 30-minute US 30 chart. Our length is at 14, and you'll remember that 14 is the default setting for the ATR. We just go right here. Let's say I want a much tighter one, 12. So let's go down to 12 and check out how that impacts our volatility reading. Now, this is a little bit different here. Now, this is smoothing. Now, remember, from all the work that we've done thus far in showing you the derivation and the calculations, those are based on simple moving averages. And what a simple moving average is we just add up all the periods and then divide by the number of periods. Essentially, that's what we're doing. Well, there's all sorts of different ways to average numbers. You can go with the smooth moving average. You can go with an exponential moving average. And some of those really can help to dial in the specificity and really the precision of this ATR tool. So if you're interested in applying some of those other moving average types, I highly suggest you do a little bit of research. Check out our module or our video on moving averages, and that'll give you some ideas of maybe you want to go with a different moving average in your reading to customize it and make it your own and tailor it to do exactly what you want to do. For the case of this conversation, we're just going to click on our simple moving average to be consistent with what we've presented as the methodology for this indicator, and you'll see right there. So we've got an ATR based on 12 periods. It's a simple moving average, and you'll notice that it ebbs and flows with volatility. Right here, we sort of saw those price bars get a little bit larger, and that's when our ATR sort of rotated up towards the top of today's range. So, and then there's your lull. Once again, there's your lull right there, and you'll notice that those price bars are relatively flat. So that's how you add the ATR indicator on TradingView. Relatively simple to do. Also, taking it off is just as simple as MT4. You go down here, you just highlight the indicator itself, and you just go right over that X, click remove, and you're back to normal. So that's the form and functionality of the ATR on TradingView. Well, we've got our ATR calculation. So what does it mean? Like all technical indicators, there are multiple ways to interpret the ATR. For the purposes of this video, we're going to stick to a few of the tried and true basics. First, it's important to fully understand what average true range is designed to do. It is intended to give us an idea of what our current periodic range will be. Think of ATR as a measuring tape. We use it to estimate the extent of forthcoming price action. If ATR is large, then volatility is at enhanced levels and a greater periodic range is projected. On the other hand, if ATR is small, volatility is minimal, as is our projected range. Now, it's vital that you remember ATR does not signal market direction. It is an illustration of pricing volatility, and that is all. That being said, conventional wisdom tells us that there are three strategies where ATR excels: reversal, breakout, and rotation. Now it's time to apply the indicator to the live market. After all, we're here to learn how to trade the ATR and profit in the process. To do that, we must understand how to integrate it into a comprehensive strategy. Now, the first average true range trading strategy is reversals. It is widely accepted that markets tend to change directions as volatility rises. In this instance, a high ATR suggests that a prevailing trend may be preparing to change directions. While this is a bit of conventional market wisdom, it's important to always question such assertions. Couldn't heavy volatility, as noted by a high ATR, suggest that an established trend is gaining momentum? It's certainly possible. That's why many traders combine the ATR with other indicators to get a comprehensive idea of what price action is doing. It's in this way that average true range works well as a strategic filter or a volatility qualifier. The second way that traders implement the ATR is in rotational trading strategies. In this case, a low ATR is viewed as a sign of minimal volatility. This characteristic is local to range-bound consolidating markets. Given this scenario, one can sell the upper extreme of a periodic trading range and buy the lower extreme in anticipation of price returning to a mean value. Lastly, breakout strategies may be executed using the ATR as a foundational tenet. In a situation where we have a low ATR, tight compressed market conditions are present. When faced with this condition, many traders look for price to eventually make a directional move. To capitalize on the breakout, traders buy above the range's upper extreme or sell beneath the lower extreme. All right, let's hit the charts and take a look at how to execute each of these strategies using average true range. Also, we'll take a look at the concept of confirmation by incorporating another technical indicator. All right, now that we understand the theory behind the average true range, how to calculate the average true range, and also how to add it to our pricing charts in MT4 and TradingView, let's talk about how to trade the average true range. Now, we're going to go over three basic strategies here. These are basic strategies, and you can feel free to tailor these or apply them as you see fit or integrate them into your own approach to the markets. The first strategy we're going to look at here is reversals. Now, this is a 30-minute US 30 chart, really a short-term sort of designed for a day trading type of an approach to the markets. And you'll notice right here, this is the basic strategy for the ATR. This is what conventional wisdom tells us the ATR is best at doing, and that's trading reversals. Well, right here on this 30-minute chart, you can see in the US 30, we have a nice big robust sell-off here during the US session, and we get down to about a low during the mid-session. Now, at that juncture, we see something interesting happening on our ATR. Our ATR is on the rise. It's actually peaking out for the day, at least for the US session. And the basic idea here is as that average true range rises, as that value gets larger, that means that the volatility, that the periodic volatility, the ranges of these price bars is getting bigger. Now, typically, that's a sign of market reversal. That means there's a lot of participation in there. There's a lot of bidding and selling taking place, and potentially what you could see is maybe a change in the trend direction. And that's exactly what happens here. So as a general rule of thumb, you'd be looking for, say, a big directional move that corresponds with a spike in your ATR value. And if in fact this area does become elevated, it is a signal of a change in trend direction or maybe the beginning of a new trend. So if that was the case and we were trading reversals with this ATR, you'd be looking to start bidding the market against this price action as our ATR rises. So a high ATR typically means a change in trend direction. That's used to trade reversals. Now, I sort of play devil's advocate with that. I think that you could also see a high ATR value, like right in here, you're getting elevated, yet the trend continues. I could argue that it's also a continuation pattern, but for the sake of this video, in a good way to begin with the high value ATRs,
is to think of them as sort of a reversal style of an indicator. Okay, the second type of trading strategy that we're going to talk about here is rotation. Now, rotation is basically when a market goes sideways and not much is happening. Price action is becoming compressed and there is no direction to the market whatsoever. Now, this is a daily US 500 chart. This is a little bit larger time frame than we just looked at from that US 30, and you'll notice a couple of things. We have sort of a highlighted area that I have already boxed in just to sort of identify the zone we're looking at. Without the box, it's a bit trickier to see, but you will notice we've got a series of smaller price bars relative to past price bars. So our periodic price bars are getting a little bit smaller. What does that mean to our ATR? It means that our ATR is at a low level. That suggests less volatility. It suggests that those ranges, those periodic ranges, are getting smaller. They're in rotation. The market typically doesn't have a direction. Now, what we're seeing here is that lower ATR sort of confirms that idea. Now, the way that we could trade something like this, if you remember from our chart patterns tutorial, is that rectangle. It's more of a bilateral type of a pattern, meaning we don't really know if we're going to go up or down. We just know that we're sort of constrained. Well, from that perspective, we could say that, well, the market's absolutely flat. Maybe, just maybe, we could start to look at some sort of rotational pattern. You'll notice right down here where this ATR value is down around 42, 41, 40, and really starts bottoming out down in here, really small ATRs relative to previous values. That would be a signal to sort of play rotation, maybe buy the bottom of this range, something like this right here, where you'll notice this we really test down maybe this low, this previous low from the previous week. You'll see right there, boom. Let's say that's a 12th of November low, and you'll notice, well, we've sort of traded inside of that zone. What happens? Oh, well, we've got a low ATR. Perhaps we just figure that market's going to keep trading sideways, and it absolutely does. You can see right there, you get a nice buy, and then we rotate until we finally break out on the 26th of November, and you'll notice that corresponds with a rising ATR value. So that's one way that we can trade those low ATR values in flat market conditions with sort of a rotational mindset. And in order to execute those trades, you'll be looking to buy in when that ATR is low or sell when that ATR is low and put our profit target somewhere in the middle of the range. That's a typical reversion to the mean strategy, and we can do that using the ATR with a relatively low value. So that's the second way that we can use this to trade. The third way is let's take a look at this US 100 chart, and this is breakouts. This is what a lot of people really love to do. They love to trade breakouts because the potential for profitability is there. You can get positive risk versus rewards and really make a decent amount of money on these breakout trades if you get in early, if you get in nice and early. So let's just take a quick look here. You'll notice that I already have a square here that sort of signifies another rectangle that gives us our slow area. But let's really examine what's happening here. You'll also notice on this pricing chart that I've added another indicator. And what we've done here is we've added this RSI indicator. But what you'll see is the concept of confirmation. This is what we're looking at from these technical indicators. Now, when we add a second technical indicator, we're looking to confirm the validity of the first. Now, both of these indicators, the ATR and the RSI, were built by Wells Wilder. So they really do go together in a lot of different ways conceptually. Now you can see right here, I've already got our box sort of outlined, our rectangle outline, but this sort of signifies compressed market conditions. And what else do we have? Well, we got some daily ranges that aren't necessarily as big as they have been. And you'll notice that this ATR accordingly is sort of getting towards a relatively low value. Somewhere down in here, you're looking at an ATR of right around 280 when we were running not too long in the past up over 313. What else do you have? You also have that RSI indicator sort of getting down near that 30. What are we looking at? About 3750 right in there, somewhere in there, 3750. Now we're getting really towards that oversold area. So think about what we have here. We can see that we've sort of got a flat market, a tight market. Price action certainly is constrained. We've also got this ATR that's coming off. We've got a relatively low ATR value compared to where we were, say, just a few weeks prior. And then you'll notice also you've got a very low RSI value. RSI value is down around 37.55. Anything typically beneath that 30 level, we would be considered to be oversold. So the idea that, well, the RSI is telling us we could get a bullish breakout. The ATR is relatively low, telling us that we have flat market conditions. Potentially, we could buy in above this range, really with respect to this low ATR. The the idea that we're going to see things pick up, and also in conjunction with this oversold reading that we're getting off the RSI. So that's an example of confirmation using another indicator to confirm the ATR. We see that a lot, and also that would be leading us to sort of a breakout type of a strategy where we have a nice defined range. We would be looking to buy in or sell below this range. In this case, the RSI suggests that the right side of the market is the top side of the market, the bullish end, and also you'll notice the ATR relatively low, and we may be in a position either to trade sideways and base out, maybe base out after this big move and then rotate up, or we could get a sudden pickup in business at any time in a growing ATR. So that's a look at how to use a confirming indicator to confirm or deny a potential trading strategy. In this instance, you've got RSI sort of signals that maybe we should go to the top side. The ATR signals that, hey, volatility is minimal. We're at a reduced level. This market's coiling up. It's becoming compressed. Maybe we're going to get a breakout in the near future. And if we apply a breakout strategy to a setup like that, at least from a bullish perspective, buying in above this zone, we could have really got capitalized on a nice bullish move. So good look at how we can use multiple indicators to confirm a trading idea and also potentially time the market. So those are three basic strategies on how to incorporate the ATR into buy-sell type decisions. How you incorporate them into your trading plan is entirely up to you.
Well, what do you think? Does the average true range sound like something that you may want to integrate into your own trading plan? If not, don't worry. Whether you become an ATR trader or not is largely irrelevant. The important thing is that you are thinking about how to engage the market on your terms. That's the whole point of indicators in the first place, to help you take well-founded, strong actions in the market.